Are we live?
Yes.
Okay, hang on. I gotta share it.
We have to wait for Evan to share.
Thanks for tuning in, everybody.
Welcome to the home front on, what is today, the 9th? 10th. Today's the 10th.
Yeah, today's the 10th.
Thank you for joining us every week. We do episodes weekly. Usually we didn't do last week because I was busy, but we usually have weekly episodes to talk about topics with real estate to help you as a future home buyer or a seller. Today we have a special guest, Brian Campbell.
Hello.
One of our preferred lenders with Waters International, and we're going to let you tell about yourself and how long you've been doing this and all the good stuff.
Awesome. Thanks for having me. My name is Brian Campbell with Supreme Lending at the McClellan region here in Austin. Been in the mortgage business for 15 years as a loan officer, and with Supreme Lending here with John McClellan's group for 5 years. We are a mortgage lender, so we are not a bank. We're a mortgage bank, but we're not a broker. I'm sorry. And we everything's done in-house with us. So our underwriters processing, our whole staff is in our office, and yeah, that's what we do. And we are what we do is we work with realtors and their clients to pre-qualify their clients to find the best financing programs to meet their needs. So it's kind of a quick idea of what we do.
Your 30-second commercial. And I think a big point that he made was that everyone's in-house, which is a really big deal when you're working with a lender. And I don't want to forget Evan, and welcome Dion. Thank you for joining.
Thank you for tuning in every week. We appreciate that. Please share the stream, like, comment, dislike. It's okay.
Don't be negative though. We'll have to boot you off.
She can't, or whatever.
We'll take negative.
We'll take some. But again, Evan, for those people that don't know me, today's episode we wanted to bring Brian from Supreme Lending in to answer you guys' questions about what it takes to qualify for the loan. Are we ready to jump into this? Or
yeah, I mean, pretty much we came up with some questions, a list of questions that we get a lot, and I think it helps to come from the lender themselves, the answers, because we can repeat them, but I think he can answer better. So please feel free to ask questions. I will be reading them and getting them answered for you. But I think the first one that we get is, what is the minimum credit score?
Great. So yeah, there's a minimum credit score for different types of loan programs. So depending on the client, the first thing we look at in the mortgage world is kind of what your credit scores are. So if for a conventional type of a loan where you're putting a minimum of 3% down, you're looking at a credit score of a 620. There are different types of loan programs, and I'll just kind of name them quickly. You've got VA, which is for veterans. You've got USDA, Department of Agriculture loans for rural areas. You've got loans that are higher value, over 484. That's going to be called a jumbo mortgage. And then you've got FHA loans. So typically the lowest credit score we see as far as a requirement for an FHA loan, it goes down to a 580. For the USDA loans, you're going to be around the 620 or more with conventional USDA. The jumbo loans and the VA you can get down to a 600. It's a little bit more difficult. Typically you look at 620. So to sum that all up, FHA is really the only one that really goes down to below 620, and you can go down to around a 580.
that's good information, Brian.
Yeah, and also I always tell people, even if you're lower than what you think you should be, there's a possibility that your lender can tell you what you need to do to quickly boost that up. They could do a rapid rescore and get you qualified pretty quickly. So even if you think you're not qualified, if you know at least what your score is, there may be a few things that are holding you back that Brian could give you advice on what to have removed, or what, basically a strategy to get you quickly pre-approved.
Absolutely.
Perfect. And the next question our viewers wanted to know is, Brian, what's the minimum amount I need to put down for a loan?
So good question. Again, different scenarios. Typically, if on a USDA loan or a rural development loan, you can do 0 down. There still are closing costs, but it's 100% financing loan. So if you qualify for that property, and we have to meet the credit requirements and the debt to income requirements, and also it's got to be in a specific area, you can put down 0 down. VA, same deal, 0 down.
0 down.
Yep. You
Yeah.
just now there's still closing costs, and that can always be negotiated in the contract to help the seller pay those. Talk to your agent about that. But everything else, FHA requires 3.5%. Conventional requires 3% down. If you're not a first-time home buyer, conventional requires 5%. And there are, and we'll talk about this some more, there are down payment assistance programs to go along with those down payment programs that you can get your down payment paid for any of those. So essentially, a lot of those can be 0 down payment if you qualify for the down payment assistance. So yeah, there's 3%, 3.5%, 5%, or 0 down.
Gotcha.
The bottom line, I think, on that is there's no one answer.
That's right.
There's so many different programs out there that you could qualify without realizing. A lot of people pinpoint or pigeonhole themselves into a box with one type, but you really have a lot of answers out there. So getting with the lender, Brian, would definitely help you to find out what you can do. And I want to thank Susanna for joining, and Glenn, please, like I said, ask questions. We will answer them. I will be reading
Please
them.
share the
and
stream.
share it out. Give us the likes and the loves. We would appreciate it.
We want to help your friends and family.
Yes.
Go ahead. Didn't mean to cut you off, Brian.
Is
Go
that
ahead.
the Susanna?
It is the Susanna.
The Susanna.
Madrano. What's the next one? Will
Got it.
my credit score go down if I apply for a mortgage, and by how much?
Well, that's another one of those questions where typically if you do a credit inquiry, you can see some slight decrease in your credit score. It depends on the borrower again. Typically it's only a couple of points. If you're pulling your credit frequently for different reasons, if you go to the store and every time they offer you you get 10% off this and that for applying for our store credit card, those are not good for your credit if you're doing that a lot. So your credit score does get affected slightly, and the idea is if you think that's going to affect you to get a mortgage, you can always talk to me, and I can kind of give you some advice and talk to you about where you think your credit scores are before we pull it and what happens. It doesn't change it immediately, but within a certain time frame after the credit's pulled, then you'll see a change on your credit report. I've seen it go down just a couple of points, down to 20 points plus depending on the individual. So.
And I think what he said is important. If you're not sure, just have a conversation before applying. That's what I always tell my clients. If you're not sure, if you're nervous, just have a conversation. It's not going to drop your credit to have a conversation.
Correct.
And we have a viewer question. Susanna is asking, what is the best loan program for a first-time home buyer?
Well, again, there's several, and it depends on the first-time home buyer. So if you're a first-time home buyer and you're wanting your payment at a certain level and you've got a substantial down payment, maybe from your own funds that you saved or as a gift, then a conventional loan may be the best, because the more money you put down, the lower your PMI or your mortgage insurance is going to be. If you're a first-time home buyer and you need you have minimal funds to put down, then we can either look at a down payment assistance program, or there's some first-time home buyer programs that are 3 or 3.5% down that are great. And so, I deal with a lot of different first-time home buyers, and it just depends. Some folks have a good amount of money to put down, some have minimal, and we just tailor the financing to what best suits their needs. So good question.
Good answer. And we also, Sam joined. Thank you for joining, Sam. And
Hey, Sam.
also, we got another question, a viewer question. What if I don't have money for a down payment?
So if you don't have money for a down payment, we would first do an application, and we make sure that you qualify for some of these different down payment assistance programs, and they vary by county, right? And so we've got several in the state of Texas, and we just want to make sure that you, one, meet your credit score requirements. And the down payment assistance programs are a little bit tighter on what you'll qualify for when it comes to debt to income ratios. And so we look at your income versus your current debt, and then we just make sure at that time it all meets that specific county's down payment assistance program. And if you qualify, then you can get up to 5 or 6% of your total down payment and closing costs paid. And then if you don't have any funds at all, The seller can help pay some of your costs. Now, keep in mind that the down payment assistance and what we call seller concessions can cover down payment and closing costs, but you will need some funds going into the loan to do a home inspection and to put up earnest money. You guys want to talk about what earnest money means?
So, earnest money, when you guys go under contract on a home, there's two checks that are usually required. One's called the earnest money check. You guys can think of that as a good faith deposit that, that you and the seller have agreed to, and you know what, I'm going to put some skin in the game to let the seller know how serious I am about buying their home. And that's usually 1% of the sales price. That is usually credited to the sales price towards the end as well too. And then you usually also have the option check, and that's just you guys' unrestricted right to be able to do your inspections. It's usually for a time period, usually between 7 to 10 days. And that way you guys could run your inspections, figure out, if it's still the house for you, and to keep it moving forward, just to keep it real short for you guys.
So just to recap, so the earnest money is the money that you're going to have in the beginning before you've got any financing or anything to kind of, your good faith that the title company is going to hold on to while you're in the process of closing. If you meet all the requirements, that money gets credited back to you. So earnest money can be from a gift also, right? Mm-hmm. So if you need funds for the earnest money, let's say it's $1,500, you can get that from a gift in most situations. And then at closing, if the seller has paid all your closing costs through seller concessions, and the down payment assistance program covers the down payment, anything else, then that earnest money would actually go back into your pocket at closing. A lot of times, buyers will put up their money, and then at closing they get a check for most or the full amount back. So that's kind of the scenario. Yes, we can cover most everything, except you'll need money for a home inspection and a earnest money.
So essentially, we can get you in a home with zero money. You do need a little bit up front, but you can be refunded. I've had a couple clients that are completely refunded at closing.
Yeah.
Susanna's asking, what rates are you seeing? Are they still relatively low?
Yes, rates are really great right now. We're staying in the low to mid 4s on most types of loans. That does depend on your credit scores, and so there's just not one answer for what rates are doing. But to go back to kind of different types of loan programs, if you have a lower credit score, FHA tends to be kinder to you when it comes to the interest rate. So we might go with an FHA over a conventional loan depending on your credit scores and your overall financial scenario. So if your credit score is a little bit lower, it's not necessarily that you're going to have a super high rate. It's just we have to find the right program for you. But rates are generally in the low to mid 4s right now for 30-year fixed mortgages.
Got it.
And also with the down payment assistance, the rate will change as well?
So down payment assistance programs, one of the things about down payment assistance is that the rate is going to be higher than what you're seeing. So if you need down payment assistance, just keep in mind you're not going to have the low rates. I always say they got to kind of make their money somewhere, right? So they're giving you a higher rate in order to cover your closing costs and whatnot. And they range anywhere from 4.99% I've seen all the way to 6% depending on how much you need. If you need less of a down payment or less of closing cost help or whatever, if you got some funds, then that down payment assistance program may have a lower rate to offer you.
I didn't even think about that.
Yeah, I didn't think about that either. That's a good point, Brian. So we had one viewer wanted to know, Brian, why should we talk now from 6 months to a year out?
Good question. One of the reasons is to kind of see what's going on with your credit. I will tell you that if you're seeing your credit scores through, like I get mine from my credit card, here's your credit score. That is not a mortgage credit report or a mortgage credit score. The mortgage credit score uses a kind of a different algorithm to determine your scores. So if you go get a car loan or renting and they tell you what your credit score is, that's not going to be the same score as what your normal credit is. So if you're at you think you're at a 650, 660, 670 according to what you're seeing through whatever source you're looking at, your mortgage credit report may be lower. And so one of the ideas to get pre-qualified early is to find out what your actual scores are, and I can always look at your report and say, okay, here's some ideas for 6 months from now or a year from now what you can do to help get your credit score higher. And if you do that when you buy, your credit scores are higher, you're going to potentially get a lower rate and lower mortgage insurance and things like that. That's one reason. There may be some things on your credit report that you don't know about. A lot of people have medical on their credit report they had no idea was there. So you might be able to dispute some things, or I might say, hey, you know, your credit card balances are a little high. You just know that when you're about 60 days out from buying, you want to make sure that you're keeping them low, so your score is going to be higher. The other thing is that it gives you an idea of what you can afford, and you know what you need to be kind of searching for. If you're buying 6 months from now, you may be looking at houses that are $350,000 when you need to be looking in the $250,000 range. That's because of what you're qualified for. So those are some reasons. You may also say, hey, this is the price range that I want, but with the money that I've got now, I'm not really able to get into that price range. So I know over the next 6 to 12 months, I need to save another 10% or 15% or whatever else. So just giving you some tips and some ideas of what can get you to where you want to be. And you know, you can do a lot in 6 months to a year. So I think it's always good to, if you don't want to get pre-qualified and pull your credit 6 months to a year out, then talk to me. We'll talk about your debt and things like that, and I can at least kind of give you some ideas to help you get in the right direction.
So you're not, when I send you somebody, you're not like immediately pulling somebody's credit score. You're just having a conversation with them about what they want to do.
Absolutely.
Okay.
I mean, we talk about it, and then if you do want to go ahead and get pre-qualified at that time, then that's what we'll do. Absolutely.
It's just you do research. Most people do research with everything that they have, so that you definitely should do research when you're about to buy a house. If you're thinking about buying a house because you're either renting, you're in a lease, I mean, it's just educating yourself and getting ready. So it's absolutely critical, I think, even at a year out.
Got it. And something Brian mentioned earlier is that he's a mortgage lender, and I just wanted him to explain kind of the advantages of working, with a lender like Supreme Lending versus like I have people who's like, oh, I'm gonna use Chase Bank, Wells Fargo, things like that.
Quicken Loans.
Or Quicken Loans. So I just have Brian explain to you guys what are some of the advantages of
Sure.
using a local lender versus
Yeah, so several advantages, and I can tell you from experience because I worked when I first got into the business for some of those larger institutions, the larger banks, and kind of one of the things that you see is that when you're working with a larger bank or some of these other places, you're working with a loan officer that is in a certain location, but they're not like we are. They don't have their staff around them. They're underwriting, they're processing, things like that. So they take your loan application, they collect your documents, and then they send it away. And what I found is that a lot of the documents and things like that, borrowers would become frustrated because a lot of things would get misplaced, asked for repetitively, this and that. When you're working with larger institutions like that, the timing of closing can be a lot longer. And so when you're out shopping and you've got a letter with a local lender like myself or somebody else that you're working with locally versus a larger bank or an online lender or something like that, somebody out of state, then your offer can be less attractive because the reputation for most of those institutions is they don't close quickly, or there tends to be more problems. And I'm not necessarily selling you on that. I'm just telling you facts. I mean, this is something that's known in the real estate industry. So you got to make an offer and you got a letter from us. You're more likely to have it looked upon favorably because we can close quickly and we've got a good reputation for closing, versus somebody that's got, even if the loan officer that you're working with is very knowledgeable and has a lot of, you feel confident in them, they have their hands tied because once they pass that loan off to wherever it goes, then it's out of their hands. And that's what I dealt with when I worked with the larger places. So it's sometimes it's kind of tough because a lot of the online lenders and things like that don't have the staff around them to get things done will offer a little bit better of a deal. Maybe their rates are a little lower, maybe their costs are a little bit lower. But if you can't close on time, and you can speak to these guys or any agent that you're working with about this, if you don't close, then that $500 less in cost or whatever doesn't mean anything if you lose your earnest money or you don't get the house that you really wanted. So you guys are out there, you're spending a lot of time, you're looking for the home of your dreams. when it comes time to get the financing piece done, make sure that you're working with somebody that's got the reputation that you're going to close on time, that pre-approved you. You're not going to run into any major hurdles along the way. So that's what I would say to that.
And from my perspective, I've dealt with horror stories where I've had to literally live on the phone with the lender or the mortgage broker the day before closing because they've already pushed closing out because they have no control, they have no information, they have no knowledge of what's going on, they can't get the documents. I mean, I have stories upon stories about not using a local lender. They also don't know the tax rate here, so they quote you $300 or $400 less than what your mortgage is going to be until they find out the taxes, because they just don't know local laws and policies. And I mean, about refining with a condo, there's so many different issues that you can experience with lenders out of state specifically that can cause you to lose your earnest money and not close on time, and that the seller doesn't have to extend the closing and your earnest money is gone.
Yeah. And, you know, we've got our own in-house appraiser. You guys have called me multiple times on properties. We kind of look at it beforehand. There's something to be said about being able to get answers about, you know, be able to go to your underwriter. Like, if I got an interesting situation, I got a unique property or a borrower that's got some complicated tax returns or something like that, you know, I can go immediately before we even go under contract and find out what kind of issues we're going to run into on some of that stuff. The last thing I would say about that is also availability. I feel like if you guys are looking at properties on the weekends and you're putting in offers and you need the sellers to be able to feel comfortable with the lender, that the lender is available to talk to them or the agent and say, hey, I've pre-qualified them, I've looked at their income, I've looked at their assets, everything looks good, we can close quickly. If you're working with some of these places, they're 8 to 5 and they're not available. And so you will get offers accepted for availability. And those are some of the major reasons why you want to work with somebody that you know is going to be available and is local. So
I've also seen on, how to submit an offer as an agent that they even stated if you have a mortgage company that's like one of your online lenders, they'll probably be weighted lower if you have multiple offers, and we deal with multiple offers here all the time.
Right.
So that's just a disadvantage for you. It's not selling you, this is just facts. These are what we deal with all the time, and explaining to you why we use local lenders that we know can get it done because we're protecting you. So
right.
It's your choice, but we're just giving you the information.
Got it. And just want to thank Brian for his time, being able to explain some of these questions to you guys that you guys wanted to have. I just want to recap just a couple of quick things. And Brian, please correct me if I am wrong, because I am going off of the memory here. So I guess the lowest credit score required is it really depends on loan type that we're going for. We can go as low as Brian says as a 580, guys. Right?
That's right.
Okay. And then as far as the minimum down payments that are required, it just depends on your situation and what you guys qualify for. So that's why you need to speak with Brian so we know exactly what the down payment is looking like. It can be anywhere from 0 down. It can be all the way up to 5%. Is that right?
Well, you put as much as
20.
you want.
Or as much as you want. Or as much as you want. But I think the question was they want minimum down, right?
Minimum down, so yeah.
Okay.
So you could do a 0 down if you qualify. That's the key, if you qualify.
Yeah, and just by the way, when we talk about it, we're talking about primary borrowers. If it's a second home, you're buying a home that you're gonna, live in from time to time. That's 10% down. Investment properties, minimum requirement is 20% down. So it absolutely depends on the individual, the family, what they're looking to do, and we can figure that out. If you want to get pre-qualified, I typically will know within the same day where you stand.
That's
so
awesome.
It's not like you're waiting for days or whatever to find out where you're at. So
I usually tell people a couple hours. Is that accurate?
yeah, absolutely. And the number one thing is we just want to validate income and assets and things like that. So as long as we can look at that information quickly, then we can have you out within a couple hours as far as being pre-qualified. So
And you need that letter, folks, to get an offer accepted. You have to have it. There's no, if you wait until you find the right house and then you're on a Saturday night, I don't know that he doesn't have a life and he's not going to respond to me, or if he's doing something, he always responds. But you just don't wait until the last minute. You're educating yourself. Get pre-qualified. Have the tools you need to do what you need to do for getting your house.
Right. And like Brian mentioned earlier, guys, even if you're 6 months to a year out, it's good just to have the conversation, speak with Brian, figure out, what exactly my credit score is, because when you guys go on Credit Karma and all these other sites, they're not quoting you guys the right credit score. Mortgage, they use this score called a FICO score, guys, which is a completely different algorithm. So what Brian can help you guys do when he speaks with you, he can help you assess where you guys are at, and then show you guys what you need to do to get to where you guys need to be in the time that you guys want to be in. So when you get him on the phone, or I recommend that you should talk with him, he's not going to immediately pull your credit. He's going to figure out exactly what you guys are trying to do, what you guys are looking for, and if after that conversation you guys feel like you're ready, then he'll go ahead and do that for you guys.
Yes, and as far as the pre-qualification goes, once we pull credit, that's good for 90 days.
It's good for 90 days.
And if you're, and the only thing after that, if you haven't found or bought in 90 days, then you're still pre-qualified. We just have to update your credit scores. So we just re-pull credit, make sure your income's still in line with where it was. So you don't have to go through a whole new process 6 months down the road to get pre-qualified again. You're just calling me up and saying, hey, we're ready to go. We need a new letter, and it takes me 5 seconds to do it. So.
Yeah, Brian's
awesome.
really good. He'll get it done quickly. If he says it's gonna get done, it's gonna get done. So, and he'll tell you if you can get a better deal somewhere else. He'll tell you to go somewhere else.
Yep, he's done that before for me.
So thank you guys for watching. We appreciate it. Please share this out. You never know who's going to benefit from this information, and we appreciate that you spend your Wednesday mornings with us.
Thanks, guys.
Spirit fingers.
See you next week.
See you next week.